Gold miners. Let's have a look at yet another couple of gold miners that are relatively similarly sized. Those are Harmony Gold and Eldorado Gold. The data here is based on their Q2 reports. As usual in our model, we look at discounted per share value after all-in sustaining costs, long-term debts and taxes. And in our model, we only look at proven and probable reserve as well as half of measured and indicated resources, without taking into account any of the inferred resources, never mind any of further exploration success. So to the extent that the market price might actually correctly value some of the future potential success, the fundamental valuation presented here might be different. But as you see, we like to lean conservative here by looking at relatively more established reserves in the ground. And of course, the data that we plug into the valuation model includes the prices of gold, silver and copper, the amount of reserves and resources in the ground, the costs of extracting those reserves. We'll look at all-in sustaining costs, we'll look at long-term debts and taxes. Of course, we'll look at per share value with a discount rate of 5%, and we have a bit of a secret sauce on insider shares, as larger percentage held by insiders helps to align the incentives of the management with those of the regular shareholders. So starting with the gold price scenarios, as usual, we're going to look at three scenarios with a balanced valuation plugging in the gold price of $1,900, conservative valuation plugs in the gold price of $1,600, and the optimistic valuation plugs in the gold price of $2,200. As you see, even in our optimistic valuation, we are far from outlandishly optimistic, and personally, I do think that gold price has a good chance of going far beyond 2200, perhaps over the next couple of years, as sentiment improves. Next, looking at reserves and resources, Harmony got quite a bit more gold compared to Eldorado, while Eldorado has a little bit more silver reserves. Both have some amounts of copper reserves as well. Again, Harmony leading here. Additionally, Harmony has molybdenum and uranium reserves, whereas Eldorado has lead and zinc. Next, looking at all-in sustaining costs, long-term debts and taxes, let's start with the all-in sustaining costs for Harmony, where I use the all-in sustaining costs from the previous financial year, as currently based on the South African rand and the exchange rate to the US dollar, the all-in sustaining cost guidance for the upcoming year seems quite a bit optimistic. And as I mentioned many times in our analysis, we do like to lean somewhat more conservative. Long-term debts are at $293 million for Harmony, and for taxes, I simply assume 25% flat tax for all of this analysis. Looking at Eldorado, their all-in sustaining costs are quite a bit lower at only $1,240 per ounce. That's based on the guidance for 2023. And long-term debts, if you include the undrawn facility for 680 million euro, in that case, long-term debts would stand at above $1.2 billion, although that facility hasn't been fully drawn yet. Hence, mostly based on the all-in sustaining costs, it's Harmony that seems to be a little bit more leveraged towards the gold price. Next, looking at per share value and discounting, I'm going to use a discount rate of 5%. Again, if you would suggest a higher discount rate, let us know down in the comments below. Harmony has over 618 million shares outstanding with 0% in insider hands according to Yahoo Finance. At current annual production, proven and probable reserves would last for 19 years. And if you add half of M&I resources, average mine life would be 36 years. For Eldorado, they have nearly 203 million shares outstanding with 0.71% in insider hands. Again, at current annual production, proven and probable reserves would last for 25 years, and if you add half of measured and indicated resources, the average mine life would be around 33 years. So with all of this data in mind, if we plug it into the conservative valuation, where we use the gold price of $1,600 and proven and probable reserves only, hence we disregard M&I, never mind inferred resources, in that case, the discounted per share value after all-in sustaining costs, long-term debts and taxes for Harmony would be just under $1. That's actually terrible compared to the current market price, but even in their own most recent presentation, they have mentioned that Harmony has always been highly leveraged versus gold price. Hence, with relatively modest changes in gold price, the valuation for Harmony changes drastically. Let's finally look at the balanced valuation, where we plug in the gold price of $1,900 and we still look at only proven and probable reserves in the ground. Hence, without any of the additional resources, the PNP reserves would give us a valuation of $9.64 for Harmony and $18.84 for Eldorado. That's actually already quite a bit more than their current market price, partly due to the suppressed market sentiment in precious metals. But this suppression isn't going to continue forever. Let's have a look at our optimistic scenarios that might suggest some upward volatility in these prices once market sentiment improves. In the optimistic scenario, we plug in the gold price of $2,200. As you see, it's not outlandishly optimistic. And we'll look at the value of proven and probable reserves and only half of measured and indicated resources. Never mind any of the inferred resources. In this case, discounted per share value after all-in sustaining costs, long-term debts and taxes for Harmony is at $22.88, and for Eldorado that's at $32.69. Of course, these prices are substantially higher than the ongoing market price, and perhaps with improvement in market sentiment as gold price breaks to new all-time highs, Harmony and Eldorado might approach these values. Although we have to realize that no model can take into account all of the factors in the real world, such as the jurisdiction risk, the risks of dilutions based on the particular management decisions, and so on. With this understanding though, some sort of purely data-driven modeling can be useful as a map for the valuation metrics. So to conclude with these very optimistic numbers, do you think it's possible for Harmony and Eldorado to reach this valuation, perhaps over the next couple of years? Let me know down in the comments below. That's all for now. Have a terrific Tuesday.